Okay, I'm back. I'm feeling restored. Hey, my accent's changed. No, it hasn't. I'm still stuck with this. Okay, so we were talking about gold. I was explaining what I thought about the near-term future for gold prices. Given that we're in a bull market, or I believe we're in a bull market because of the economic situation we're in, because of all the money printing, because of everything that's happened. Of course, there will be variations in between that, but okay, enough of that. I'd like to do something which I think is quite helpful. I'm going to have a look at a couple of stocks, and we really need to, or at least myself, I'm focused on preserving my gains, preserving my capital, so that I can be left to trade another day. So the first stock which I would like to look at is Ramelius Resources. So RMS. Now, just understand one thing: just because I've invested in RMS doesn't mean that it's somehow magical. Of course, it's looking quite magical, but once I've invested in a trade, these just become numbers to me. I don't care what the amount of ounces are. I don't care what the output's going to be and that sort of thing. That counted when I was selecting the stock. Okay? But now I'm trading the stock. And as you know, I don't invest in a company, I invest in the trade. So this looks like a pretty good trade. Okay? So what I would like to do is I would like to see, okay, where are we in terms of channels, where are we in terms of support zones, etc. So if I go to let's say 1 hour chart, let's see how far back we can get. Okay, so what we've got is we've got a couple of months of that. Okay, actually it's probably more like that, but there's one, and I would say that these are slight breakouts to shake out weak hands, coming back in, that sort of thing. But RMS has been quite a stagnant little sucker for quite a while, and then it ends up doing this, outperforming just about everything else. That's probably because of its upgrades and so forth that it's acquired over this period of time. So it's not the same animal now as it was back then. Now, interestingly, RMS was at this price level when gold was around about 1300. Okay, now gold hasn't even broken 1200 and we're already at the same price level. So what are the channels that we're looking at? Where are the supports? Where are the resistances? So this is what I see. Okay, and we've actually broken out and above. So last time it wasn't able to maintain that sort of price level, especially because we got a lot of offloading to the common folk, which is you and I, and we go buying into that, whereas the big boys are busy selling into that. Now we've got not only this channel, but we've broken through this channel. We're up here. Okay, so it's been a couple of days well, it's been 1 or 2 days operating above that. So I do expect a retest of this channel at 60 cents. Where would I put my stop? I would put my stop around about here, 59.5, 59. Now you can say, oh Jack, but you're just going to get kicked out. Well, you know what? I want to get kicked out if it doesn't have enough strength to stay above 60 cents. If it starts doing that, then I know that there's enough weekends that it can actually start another selling spree. So yes, I'll put a stop loss because I want to preserve my gains. There are my gains. They're mine once I convert into cash. I don't know if I'll be converting into cash yet, but this is Ramelius Resources, and these are the levels and resistances we're looking at. I will actually touch on the American gold miners and what happened on Friday. Like I said in part 1 of the weekend report, it was a bloodbath, but that's a combination of profit taking. It's a combination of their tax reporting period, which is from January to December. So if we do break through this support, then I would expect at least coming down to 57 cents or maybe 55 if the momentum overshoots. That's why I said I'm not in love, even though I love this, I'm not in love with Ramelius Resources. It's numbers, it's a company, it's a trade. Okay. Next one I'll be looking at is MOY. That's also had a decent amount of, so that's Millennium Minerals. It's had a decent amount of gains in the last couple of days. As you can see, it's just been on an absolute tear. Now it hasn't broken into this channel, okay, 26 to 30. That's because gold hasn't even topped 1200 yet. But let me tell you, once gold tops 1200, we're not going to be stuck in this channel. We're going to be moving to higher places, okay? So, where would I put a stop? I would put a stop around about 23 cents. Now, remember, you might get kicked out and you'd have to buy in again. Maybe it's not going to continue all the way down to 20 cents. But if you're dealing with 100,000 shares, I think I've got 100 or 150,000 MOY, then that movement over there is quite a bit of money. So preserve your capital, people. Take care of yourselves. Remember, it's difficult to make money. Trading is easy, but it's also hard if we don't follow rules and you don't have a system. So where would I put my stop? I would put my stop roughly just below that point, because as you can see, you don't want to get kicked out with that kind of movement there. You really want to get kicked out if it breaks through here and it starts trading around here. So 22.5. Now keep in mind, realistically, we're in a rally phase of gold. Yes, we've got a pullback of a couple of dollars, but who cares about that? So capital gains wise, it might make more sense to simply hold it, let it trade around, let it bounce around, and when gold fixes up, do that. So it's up to you, your trading style, what you want to do. I'm telling you what my approach is. My approach is that if I can sell 100 shares, or if I can bail out 100,000 shares on 22.5 and buy them again at 19 or 20, because we might overshoot this, then I would do it, because there's a lot of gain that I can keep. So MOY, you can see where the trading channel is. You can see the trend. Trend is up. It's quite obvious. But yeah, a good performer. Like I said, I'm not a financial advisor. I'm not going to go into the balance sheets and the profit and loss statements and things like that. Remember something: all the balances or balance sheets, all the profits, all the rumors, everything is already in the price. So let's say that the price starts coming down, okay, and starts coming down, and we're already breaking through there, and you tell yourself, oh, but Millennium Resources has got so much in the ground, it's cost, and you keep on justifying that. Remember, that's already in the price. Everybody knows that. So everybody who is trading a stock or an asset already has that information, the same information that you have, and they are trading it either down or up based on that information. So try to think better by not justifying to yourself, acting like you have information that other people don't. Of course, if you do have information that other people don't, it means that you should be locked up for insider trading. Next, I'd like to take a look at Blackham. Okay, what a hated stock among the subscribers. Blackham, all evil, because a lot of us bought up there and some rode it all the way down. Okay, what you can see is Blackham is a low volume stock. Now this is very telling. When Blackham was over at 44 cents, look at that volume. 48, how can I get that? Let's have a look. Volume was 3.58 million shares traded. while the shares are down here. Now I think there was a company handover or shares being swapped over between HHL and other people. I'm not really interested in that. But regardless of who and what and where and why, when you get that amount of volume surge at this price level, it can only but go up. Okay? In the same way, if you get a negative volume surge, it's going down. Okay? So trade the price. Trade what's happening. Okay? So where to put a stop on Blackham? For me, personally, I would put a stop around about, well, let's say 53 cents. But keep in mind that's with a lot of volume of shares. I think I own somewhere around 150k of Blackham. So the difference between 53 and 51 or 50 cents or 49 makes a big difference for me. But your trading approach is, your responsibility. You got to make sure that you do what you're comfortable with. Now, keep in mind that over here, there does seem to be a bit of a channel. It's not really a channel. It's actually between channels. All right. It's more like that. All right. So it goes up into this channel. And if it fails through this channel, so actually a good stop would be 57, because if it's trading down 57, it's probably going to come down to 55. So it's a very good performer. It did very well from this level. Obviously you don't feel like that if you invested over here, but every day is a new day. The market couldn't care less whether you bought over there or whether you bought over there. Price will happen as price will happen, and you need to trade accordingly. That's why my slogan, what I keep on repeating, is think better. So if Blackham starts breaking through here, but you want to espouse your love to Blackham and how amazing it is and the gains that you made that you're busy losing, well, then you're not trading correctly. You're going to lose your capital. You're going to wipe out your gains. Okay? And I know that's not everybody's cup of tea, because a lot of people they want to hold on, and there's nothing wrong with that, as in old turkey style, as some would call it, which means you hold, and as it grows over time, you make your gain. No stress, no fuss. Okay, that's not my style. My style is to try and, well, on Blackham I did exit around $1.16, so I feel proud of that exit point. I did actually enter again around about 90 cents, and that didn't go so well. Hence, I'm sharing my experience with you. I'm helping you to think better, and at the same time I'm helping myself think better, because I'm accountable for my actions once I tell you what I'm thinking. Alright, so with Blackham, there's this empty channel. This is a like a conduit channel. It's a conduit into this channel, and it's a conduit out of this channel. So you can see there wasn't any resistance here. It just moved, and it gapped up into this channel over here. So ultimately what we want to see is, we want to see some action above here, 62.5, and we would like to move into the next channel, which is around about 67 to 80 cents. Okay, that's a bit of a weak channel. It's probably more like that, 75 cents, and then we can move into that. But it's very important that you start recognizing where you are in the bigger scheme of things, so that if you watch your share price declining, that you don't have to suffer in denial, rather make a decision. And remember, confirmations are very important. That means don't try and guess a bounce, don't try and guess a bounce. Rather enter once you see a reversal. Now, this is a powerful reversal, and not only, if it wasn't very powerful, it would have bounced around inside here. But instead we went straight through, and that's because there's so much bearish sentiment, such negativity regarding gold, that this was really an extreme overshoot of momentum into the negative territory. Now I know that Blackham, is only a new producer, but its balance sheets are going to reflect something good. I know I'm not going to discuss that because that's already in the price, but on any of the gold stocks, you would find that there was an overshooting of negative sentiment, which is a fantastic buying opportunity. So if you bought around about 42 cents, you should be patting yourself on the back. If it's sitting at 60 cents now, then you've made quite a good gain. Keeping in mind that a bank would only give you about 2% a year, and here you're getting quite a bit back. You've already made 20 cents on your initial investment. So that's Blackham. So we've gone through Ramelius, we've gone through MOY, we've gone through Blackham. One that I'm interested in, which I actually haven't charted and I don't own it, is Emerson Resources, but the patron, he actually purchased Emerson Resources around about 13 cents, and he's moved into this channel here, 13.5. It's not a high volume stock, so it's a little bit more difficult to, I suppose, extrapolate, but at the same time, you can clearly see that there are channels here. The next channel would be, there, and then a breakout above this. A breakout above 17 cents would probably mean blue sky, but in order for that to happen, we would need a surging gold price. So I just touched on ERM, but I don't own ERM, okay? And then SVL. So SVL, laggard. It's been holding back. It's been not performing as gold has, but that's because it's a silver miner, and that's because silver is still range bound at the moment. And if I were to look at silver, let me show you. So silver is really stuck over here, okay? Let's say more like that. So what you've got is you've got an entering of this channel, you've got a fake out or false breakdown, getting rid of weak hands over there, and it comes back in, and you've got a test, and then we've got this stagnation here, for silver. Now what we need for silver to rocket further is a surging gold price, okay? I do believe that silver is building up some compression momentum. Remember that back here, where were we? So on the 3rd of January, let's see, gold. On the 3rd of January, we were still hanging around 1147 to 1160, right? That's the 3rd of January of this year. Now heading back to silver, we are still at the same price range as the 3rd of January, clearly. So silver is building up some sort of momentum, and I'm expecting that to far outperform the movement in gold. But what we do need is a confirmation that gold is going to at least go up to 1200. If gold goes up to 1200, then I would expect a breakout into the next channel, which is over here, okay? So I expect this kind of movement, but in the opposite direction, up, and then an overshoot somewhere around 1720, and then a churning around depending on what gold is going to be doing. So all the way back to SVL, which is the Australian silver mine. It's not a producer yet, it's an explorer, but it's building up to mining and producing at some stage. Like I told you, it's already in the price. Whatever you read, whatever is in the reports, whatever anyone is discussing regarding Silver Mines Limited, it's already in the price, so trade the price, okay? What we've got over here is that channel here. There was a beautiful breakdown, which was a great buying opportunity. Actually, I didn't get some here, but a colleague of mine did get some over there. But what we need is the consistency in silver pricing to remain around about 1650 and gold to remain above 1160, around about there, in order for SVL to retain these gains. Now, because it's a low volume stock, you do get up to like 20 or 30 trades, or only 20 or 30 trades a day, which is not fantastic. I don't generally enter low volume stocks, but SVL, I did previously enter it at 23 cents and sold it at 28 and a half, and I am intending on doing the same trade on SVL once when silver, the commodity, starts moving. Because it's a low volume stock, you will get significant movement. I do expect silver to return, SVL to return back to this channel very shortly, especially if there's confirmation of a gold bull trend. So when doubt is removed, then we'll easily be what I believe is reaching. Now remember, you can't chart this because there was consolidation of the volume, but what I would be looking at is then some trend lines that would go at a diagonal, but at this stage the trading boxes seem to be quite effective. But I would imagine an increase in price and then an overshoot of 30 cents, easily up to 40 cents. That's my opinion. Like I said, don't base your trading off of me. I'm not a financial advisor. As I've also said before, show me a financial advisor that actually makes money on the stock market. Alright, so that's SVL, I've done MOY, I've done Blackham, I've done RMS. I pretty much believe, let's have a quick look at Bitcoin, which is, when we started, look at that, okay. So Bitcoin, 1 day chart, alright. Now, you may or may not recall my previous chart. Let's just see if I've got it again. Sorry about this. I closed everything off when I went for a drink of water. And I know I give more information than is necessary. But I'm only human. Okay. If you look at this chart that I made over here of Bitcoin, you'll see that I charted what happens in history or historically. Now, look for yourself. Right now we're heading back already to 830, round about there. So a bounce off of 800 would be a positive move, because you could be surging back up to the, roughly just below the 900 mark. But I actually believe that we're looking at this kind of mark here, somewhere between 600 to 700 on Bitcoin, and it's not impossible, because look at the aggressiveness of this downtrend. So I just want to show you why I called it top as well. This is why I called it top, because that's exuberance. That there is thinking that Bitcoin, or whatever your asset is, whether it's gold or whether it's the US dollar or whatever, once you start getting into this area, which I call the Ponzi area, because the last one to be holding it loses. Once you get into this area, really, if you don't take profit, you're just being greedy. If you look, if you listen to what Lord Rothschild says, he's quoted as saying, you leave the last 10% to somebody else. Now, I did my post of Bitcoin, exiting Bitcoin around about here, 950. And it actually rallied all the way up at 1134. So, if you did exit at 950, you would certainly have more than you have now. So look at that negative volume over there. It's going to be a while again, I think, in my opinion, before Bitcoin heads further up. So for instance, if you were going to chart it out, if you were going to chart it out, it's going to be a while yet before Bitcoin reaches these levels. That it probably will reach these levels of 1,400, 1,200 at some stage, but I don't think it's now. simply because this was due to the Chinese capital control issues that the Chinese were going through, and they wanted to get their money out of China. And so how were they doing it? They were doing it with Bitcoin. So when will Bitcoin go up here to 1200? Well, it's anyone's guess, but I don't think it's now. I think it's in the future. That's why, if you want to trade Bitcoin, remember it's a good investment in the way that it's very volatile. It has, once it catches a bid, it really goes for it. But at the same time, with anything, whether it's gold, whether it's the Nasdaq, whether it's crude, whether it's a stock, whether it's real estate, whether it's physical bullion, there are peaks and there are troughs. And once you realize that, you'll start to acquire wealth a lot quicker, simply because you realize that everything has cycles. Okay? So that was Bitcoin. I think that pretty much covers everything that I wanted to cover on the... Oh no, actually, 1 second. Let me show you what happened on... in the American US miners, and let me get to what I think is going to happen on Monday. So gold miners index. All right, so the gold miners index in the US has just been on a tear. It's been brilliant. Look at that. It's been going up. It had a correction. It's been going up, had a correction. The only thing here is that you've got in the US, you actually had a low that went lower than the previous day, but at the same time it closed above the previous day, and that's exactly what I said in part 1 of the weekend report. So if you take all the gold miners, this is the index for the, well, actually for the major gold miners in the USA. You get another one called GDXJ, which is the junior gold miners, which I'll also briefly look at. What happened was it rallied on the poor economic data and then sold off. So it opened, rallied, sold off, overshot, because obviously there are short sellers. I was actually one of them, short sellers that had a short selling kick in over here, and it's short selling all the way down. But what I do like is the amount of volume that pushed it up, because it reached the previous support level. It's not such a strong support, but there it is, bang bang, and over there. So what you got is this resurgence. So if you got sold out of the GDX fund or ETF in the USA, then you wanted to make sure that you buy back somewhere around here, so that you could, unless of course we're going to get that, and we may have another negative day, but you don't want to stay kicked out, especially with the Dow being at all-time highs, Dow 20,000, Dow 20,000. When the Dow reaches 20,000, it's either going to go up or down. And what I can say is that what's been powering it up to 20,000 isn't much. So my bet is on a profit-taking event on the Dow, which means that I would want to be in gold at that time. So let me show you how this GDX looks on the 15-minute graph, just to make it a little bit, no, let's do the 5. On the 5-minute graph, there's nothing strange or odd about the price action that occurred. So I'll chart this out for you. If you look at this, this was on the this was in December. If we chart out that, then you'll see that at the moment we've just undercut there, but we're coming back in, and then roughly there. So what I expect to happen is a retest and up. That is if gold can recover its gains, and if the US dollar starts showing some weakness. Now, at the same time, we've got the Gold Miners Junior Index. I think it's GDXJ. Yeah, Gold Miners Junior ETF. And what you can see is that on the, it opened up lower. It rallied up to the previous to the previous day, sold off. What you've got in the junior miners, and in Australia the equivalent is what we're in, or what I'm in. Blackham, MOY, SVL, RMS. You can consider them all to be junior gold miners simply because of their market cap. So, what have we got here? What we've got is the junior gold miners, which is where I am, but not in the American one. We're in the Australian sector. I'm not aware of a junior gold miners ETF in Australia, but we're in the equivalent. So what you had is you had a gap up, you had a pushing to the top, and then the next day you had a gap down, also pushing up to the previous day's gains. But then you had this sell-off as the US dollar started rallying. We broke through this trend line. Now look at this, for trading purposes, it retested. You want to go short from here, and then it actually found support on the lower level and actually made up the entire amount that the shorters went. The guys who thought that it was going to go down further, but it regained all of its gains. So where it opened on Thursday and it closed, it actually closed Friday evening above its opening point on Thursday. So what has been lost? Well, what has been lost is all of this. Okay, look familiar? It looks a lot like the gold chart, where everything that got given gets taken away. But does that mean that the game is over? No, of course not. So what we could get is a retest here, but ultimately I expect this to be returning back into this trading channel, and then given developments with Trump and whatnot, we should break through this rather easily. Let me give you an indication of where we are in the bigger picture. In the bigger picture, in the bigger scheme of things, we haven't even touched where we were back in July and October and September and so forth. So this is just one little step in the bigger scheme of things. And where are we with that? Well, look, you've got this trading channel over here. You can see that the GDX, it broke out, but it failed the breakout on a daily basis. Okay, but once it breaks out through this, then we can expect GDX to go here. Here's the next trading box. Now remember, these are breakouts, but they're failed breakouts. So they should be profit-taking events for the big boys, and they should be profit-taking events for you too, and for me. I'm not giving you advice. I'm just telling you what's on my mind. All right. So what do I expect to happen on Monday? That's the 9th of Jan. Well, it is difficult to say. You see, we don't have the same tax period as the USA or Canada. We also, our exchange rate has weakened. Let's see. So our exchange rate during Friday's trading actually came all the way down. So essentially what happened was it came down about 0.5%, while gold also weakened 0.5%. So if you look at it from this perspective, where our exchange rate was, let's say 70, you know what, this is the day chart. Here's the 1 hour chart. Okay, so when gold was 1380, just a day or two ago, our exchange rate was roughly 7.734. Okay, so let's say that we've got 1180 gold price, and you divide that by an exchange rate of 0.7346, you get a gold price of 1606. Okay, on Monday our exchange rate is going to be roughly 0.729, but the gold price has dropped to 1170, let's say 2.5. Divide that by 0.7289, we've got almost this exact same gold price. So while the US dollar for US miners, when it rallies, it's not so fantastic for US gold miners. At the same time, for Australian gold miners, we've got the buffer. What you will find, however, and what my bet is on is, you get traders that are watching GDX in the USA and the gold miners in the USA, such as Huey and the Gold Bug Index and so forth. And the sentiment is negative in the US on gold or gold miners, at least for those couple of hours that it's sold off. So that through contagion might come into the ASX, and we might get some participants that may panic and sell. Maybe not. It depends. If you're watching the Australian gold price, there's actually no problems. But if you're basically trading off of feelings and sentiment, then you would copy the US gold miners. However, I do think that any selling would also abruptly end halfway through the day or at the end of the day, because I do think it is going to be an opportunity for the big boys such as the funds to end up buying the shares that are being sold. So I don't see that as an exit point for for establishments and for institutions. I actually see that as a buying opportunity, and at the same time, I would also be interested in buying if I had the capital to do that. Now, that's not certain that there's going to be a panic sell on Monday. I use the word panic, and I hope that doesn't make you panic, but at the same time, if you've got stop losses, you shouldn't really be worried about it. Okay, so I just wanted to explain to you what happened on Friday night, and I also wanted to explain the difference between the US gold miners and the Australian gold miners. So while the US gold miners, instead of getting 1184 an ounce, they're now getting 1172 an ounce. Likewise, on the contrary, on the flip side, we are getting above 1600, whether it was Friday or whether it's Monday, whether it's last week Thursday, we're still getting above 1600, which puts the Australian gold miners in that sweet spot, and that's why I also trade Australian miners, simply because you've got that buffer zone that protects you to a certain extent. But remember, everybody knows that. Traders know that. Institutions know that. That doesn't stop the price from fluctuating. So price is a reflection of sentiment. Sentiment is a reflection of information. Okay, and the information that has come through is that GDX and GDXJ, there was a profit-taking event on Friday, but at the same time, the information that we also have is that the Australian miners are still getting the same amount of they'll still be making the same amount of profit because they're still getting the same price for their gold, regardless of the fluctuation in gold price, because the US dollar has appreciated and the Australian dollar has depreciated conversely. So I want to say thank you very much. I know that this was long, but imagine if I had to type this out. I want to tell you that usually my weekend reports take me about 3 hours to type out. So this has taken me a lot. I think I've accomplished a lot more in a smaller time frame. Let me know if you like this video. You can like it on YouTube. You can share it, email it, tweet it, Facebook it. I would really appreciate that if you found this helpful. Once again, I'm just a trader like you. I'm just applying what I see, and hopefully I'm helping you think better. Have a good weekend further.